Hey there, crypto enthusiasts and market observers. Welcome to Key to Crypto, or KTC, your ultimate hub for everything related to crypto. For today's video, we'll talk about Lyn Alden and her insights on Bitcoin. In a recent interview, Lyn Alden offered a profound perspective on the intricate web of global currencies and their perpetual devaluation. She paints a vivid picture, noting that there are over 160 different currencies, each resembling a unique currency bubble, and they're all on a trajectory of devaluation, albeit at varying speeds. The stronger currencies experience a relatively milder devaluation, typically at rates around 6 to 8% growth in money supply each year. Meanwhile, many developing country currencies are caught in a relentless devaluation cycle, often witnessing staggering growth rates of 15%, 20%, or even 25% annually, leaving their citizens feeling persistently diluted. This ongoing devaluation compels individuals to navigate a financial treadmill, perpetually striving to boost their income, judiciously allocate their savings, and continually seek investment opportunities. In essence, it's a treadmill where everyone's pace differs. Lyn Alden is a revered macro analyst and the author of Broken Money, an enlightening work that scrutinizes the evolution of money through the lens of technology. Within the book, Alden delves into the systemic flaws plaguing the global financial structure, illuminating how it perpetuates the impoverishment of billions worldwide, while disproportionately enriching the top 1%. Alden underscores that despite humanity's strides in technology, energy abundance, and medical advancements, our monetary system remains archaic. It's a relic that has withstood the test of time, persisting despite its evident failures. While we've achieved extraordinary feats, such as landing on the moon and making remarkable medical advancements, we're still shackled to a debt-based fiat system. Fiat currencies, devoid of intrinsic value, rely predominantly on the faith vested in the issuing government. However, this faith dwindles when governments repetitively print money, eroding its scarcity and public acceptability. Alden cites examples like the Lebanese pound, Zimbabwe dollar, and Venezuelan bolivar, which have been subjected to catastrophic inflation, rendering them nearly worthless. Numerous other emerging economy currencies appear to be teetering on the same edge. Alden acknowledges that major currencies, including the United States dollar, still retain substantial value compared to their weaker counterparts. Nevertheless, she foresees a future where these weaker currencies will inevitably fade into obscurity, and even the mighty dollar may meet the same fate, mirroring the tragic demise of the bolivar or Lebanese pound. This ominous outlook underscores the urgency for sound money advocates, like Alden, to champion the adoption of a sound money system anchored in assets like Bitcoin. As the world's largest cryptocurrency with a fixed supply and various intrinsic qualities, Alden contends that Bitcoin is the sole viable alternative to the crumbling fiat system. In the said interview, she delves into what a world under a Bitcoin standard might entail and the compelling necessity for this paradigm shift. Stay tuned to watch these enlightening insights, subscribe to our channel, and activate post notifications for more captivating content like this. In the interview, Lyn Alden delves into her profound insights, emphasizing that among the many options, there's nothing currently on the horizon that stands out as prominently as Bitcoin. She singles out Bitcoin for its unique combination of features, primarily the robust blockchain infrastructure, coupled with decentralized attributes like small nodes and proof-of-work consensus mechanisms, making it an exceptionally resilient and secure form of digital currency. According to Alden, these aspects are integral to Bitcoin's intrinsic strength. She goes on to discuss the critical role of network effects and liquidity, underscoring how Bitcoin's expansive network makes it capable of withstanding formidable attacks and challenges. In contrast, many alternatives that employ different methods typically revolve around central hubs, which render them vulnerable to attacks. Alden provides real-world examples to elucidate the point, illustrating cases where governments could easily stifle operations involving assets like gold denominations. The central hub, in such instances, becomes a single point of vulnerability. In her view, Bitcoin's design fundamentally addresses these problems by establishing a radically decentralized ledger system, which she deems to be as decentralized as practically feasible. Though she acknowledges that there are areas for potential improvement, such as mitigating supply chain concentrations, she maintains that Bitcoin, thus far, represents the epitome of decentralization. It is, in her perspective, the most promising solution currently available. Beyond the United States, Alden acknowledges that stablecoins are serving a similar purpose, especially in countries like Argentina or Nigeria. Stablecoins, despite having central hubs, offer a unique advantage as they exist outside of government jurisdiction. This allows individuals in these nations to access decentralized, peer-to-peer networks, facilitating the transfer of value across borders, circumventing traditional and heavily regulated methods like wire transfers or conventional bank transactions. In essence, the advent of technology has ushered in a transformative financial landscape where Bitcoin and similar assets with decentralized roots can penetrate most countries with relative ease, offering a resilient alternative to the multitude of global currencies. This dynamic environment is evolving, and central hub systems can extend their reach into various nations. Still, for global market penetration, Alden contends that a decentralized foundation is essential. Bitcoin, in her view, stands as the closest realization of this concept. Shifting gears, Alden underscores the mounting concerns over the escalating national debt of the United States, which recently reached a staggering $33 trillion. The U.S. now finds itself among the world's most indebted nations, with its liabilities amounting to around 130% of its GDP. She points out that the debt-to-GDP ratio is anticipated to surpass the much-feared 130% mark by year-end, and as the cycle perpetuates, the situation is poised to spiral further out of control. Alden references warnings from the U.S. Congressional Budget Office, which has consistently cautioned about the nation's unsustainable fiscal trajectory. In closing, Alden issues a sobering forecast, suggesting that if current economic and financial problems continue to compound, the US dollar is headed on a trajectory to mirror the disastrous fate of currencies like the bolivar. This challenging scenario is explored in depth throughout the interview. Alden doesn't shy away from addressing critics who assert that since the US dollar reigns as the world's reserve currency, there's no harm in printing limitless quantities without repercussions. She provides valuable context by taking us on a journey back to the late 80s and early 90s when concerns about the national debt reached a peak. During this era, the debt was a central topic, even manifesting in a famous debt clock display. Notably, Ross Perot ran a highly successful independent presidential campaign, largely centered around the issues of debt and deficits. This was a pivotal moment in history where interest expenses, both in absolute terms and as a share of the economy, were on an upward trajectory. At this point, many believed that the situation was entirely unsustainable. However, what unfolded was a 30-year period of robust disinflation. Key factors contributing to this period included China's opening up to the world, the Soviet Union's fall, and the infusion of Western capital with Eastern labor and resources. These developments fueled productivity growth and globalization, which acted as powerful disinflationary forces. Declining interest rates, even as debt levels rose, helped mitigate concerns about the national debt. In Alden's view, the transition to a sound money system is now an unavoidable certainty. It might not be immediately apparent, as citizens in emerging countries with weaker currencies can temporarily rely on stronger ones like the US dollar. However, even the so-called strong currencies are not immune to inflation, as the need to print more money to meet colossal debt obligations becomes pressing. Inflation rates will surge, leading to a point where the world can no longer rely on even the dollar to preserve wealth. According to Alden, this day is approaching sooner than most anticipate. When that pivotal moment arrives, Bitcoin is poised to emerge as the universally embraced safeguard for preserving and growing wealth. That's it for now. If you enjoyed today's content, show your support with a like and hit that subscribe button. Together, let's build a community where curiosity and wisdom are freely exchanged and nurtured. Until next time, and remember, the future of finance is here with KTC.